Good afternoon, ladies and gentlemen. Good afternoon, and welcome to the ActivTrades Monday Market Matters webinar. I'm your host, Paul, and today here we are to talk about how to trade the US dollar. Fascinating subject, lots for us to cover in our small allotted time here. Just before we start, just want to check that those of you who are here in the room, that you can both see the slides and that you can actually hear me. We've had a couple of occasional challenges there with the technology, and we always want to make sure that we start off on a great foot. So Daphne says all good. Thank you, Daphne. Great to have you here. Carolyn, fabulous. Thank you for joining us. Okay, thank you for joining us on this Monday, 16th of October. I hope you're all well. Hope you've enjoyed your weekend. So what are we going to talk about today? Well, as always, we'll talk about Monday Market Matters. But so we're going to be here talking about trading the US dollar. And I appreciate that this will probably help traders who are new to FX markets, new to trading, just in terms of giving them a little bit of insight as to why the US dollar is so important, what role it plays in financial markets for us. And for new traders, how could you use it in your trading? Okay, what are the ways that you can actually trade it utilizing the ActivTrades platforms that you have access to? And then, as always, we'll switch across to the live markets towards the end of the session, have a little look at what we've learned today on our educational piece, and have a look at how those US markets are starting out for the week ahead. As always, if you've got any comments or questions, you can put them down in the chat box. I'll try and answer them as we go if I can. And as always, it's useful to know, what, if any, experience of that those of you joining us here today, what have you got in terms of trading the US dollar? Okay, is it something you do actively? Is it something that's not part of your current way of operating? Good to know. Okay, and good to hear what your own experiences have been. And just a little bit of housekeeping before we start off. For those of you in the UK, okay, in particular sort of London and the southern areas, you may wish to join ourselves, okay, and me included, at the London Trader Show this Saturday, 21st October, sponsored by ActivTrades. It starts, I think, about sort of at 09:30 on Saturday morning in the Novotel London West. As I said, if you're sort of in the area, you'd be very welcome to join. I will be talking on one of the panels, and I'll be doing a presentation, and a couple of my colleagues will also be there, and also the rest of the ActivTrades team will be there. So be sure to come down and join us if you wish. You can see there's a link there. You might not have access to that. You might just want to, just to be able to Google that, the London Trader Show, and you can get a special ticket by using the code Active50 that you see there at the bottom. I hope that basically helps you. Okay, so yeah, as I said, I'll be there this Saturday, so it's a chance to sort of come along and listen to some great pieces on markets and trading and investing, and then also you could meet myself and just have a jolly day out in London, okay, with the trading there. So as I said, have a look for that. Okay, London Trader Show. Be sure to use the code Active50 to get yourself the best tickets. So Carolyn says, I'm not currently trading USD, but interested to pick up new tricks. Aren't we all, Carolyn? Aren't we all? So hopefully there'll be some here that we can talk about during our particular session. For those of you who don't know me, my name is Paul, traded for many years, traded for funds, traded for clients. Primarily, I do like to focus on FX, indices and commodities. Tend to be a trend trader for my longer term trading, and I tend to be a mean reversal trader for my shorter term intraday trading, all of which have an element of relevance today when we're talking about the US dollar. So for those of you joining us for the first time, okay, who are new to Monday Market Matters, Monday Market Matters is our regular webinar series, the aim of which is to just help you start the week in the right frame as we prepare for the opening of the US markets in about 24 minutes. So every Monday, 2 o'clock London time, we have a quick look at the news ahead for the week. Then we do the main pieces on education. So today it'll be about the US dollar. We also include elements on looking at the ActivTrades platforms and tools that you have access to as an ActivTrades client. And then, as I said, we'll switch across to the looking at the live markets as we start the US session, see what that might hold in store for us at the start of our week. So there's always lots to fit in, always lots to cover. We're never short of things to talk about, so we'll look to crack on with it. So We'll start with just a quick look at what's the main news that we are seeing coming up in the week ahead. Those of you who join me every week, I say it every week, namely that if you're a new trader, I don't expect you to be able to maybe analyze the major news, but it is important that you do know when that news is coming out, because if it's a major piece of news, it can induce volatility into the market, and that might not necessarily be the best for your particular trading plan of that day. So it is important to know when that news is coming out. The best way is on an economic calendar. You will find there is an economic calendar on the ActivTrades website and elsewhere on the internet. So there's no excuse not to have a little bit of an understanding of knowing what is the major news coming out for the week ahead. So we had quite a volatile week last week, partly that with some of the US CPI data, but also an element of the, let's say, the geopolitical sentiment as we were seeing events unfold in the Middle East, which continue to do so and will undoubtedly have an impact on markets this week and probably for the next few coming weeks. But when we look at what's going on, in specific, well, today, we had inflation data from New Zealand, but also, it's important to know that we also had a change of government in New Zealand over the weekend with their elections. That has had an impact on Kiwi dollar this morning. If we have time, maybe we'll have a little look at that. Okay, how that has played out, and not unsurprisingly, how that has played out against the US dollar. And we've got quite a bit of data coming out. For those of us here in the UK, one of the things that will be interesting is that we've got a fair bit of data coming out Tuesday, Wednesday, and Friday in the UK, which will have an impact on possible trajectory of UK interest rates. So we've got UK releasing employment data tomorrow. So of course, if that employment data and wage increases is still rising, or it continues to rise, well, then that tends to filter its way through into sort of services inflation. That in itself will have a filter its way through into the overall inflation picture, and that sort of has an impact on the sort of decisions the Bank of England will make on whether or not there will be interest rate rises here in the UK. There's also the Germany publishing its ZEW indicator, and that is just an indication of, it's just really business confidence, okay? But people still have take it very importantly because it's a reflection of the overall Eurozone. We've got Canadian inflation data and the US retail sales data. As I said on Wednesday, we've got the UK releasing their new inflation figures, and undoubtedly Mr. Bailey and the rest of the Bank of England will be watching that nervously to see how those numbers play out in terms of what impact it will have on their decisions going forward. We have Thursday, we've got Australian employment, okay, the Philly Fed Manufacturing Index in the US, and also Japanese inflation data. And then on Friday, we have UK retail sales figures, which perhaps not as is perhaps impacting on, let's say, the inflation numbers, but they do give an indication of the state of the economy, and in particular the sort of the confidence and the state of the UK consumer. So it's lots of data coming out, but certainly for the UK, it will be quite an interesting week. All right, and then as I said on Saturday is the London Trader Show, and maybe we'll see some of you there. So as I said, we always like to have a little look at the news, but let's focus mostly on what we're looking at in terms of education for our session today, and in particular looking at trading the US dollar. And what we want to understand is, well, why is the US dollar so important, especially in trading FX? I would imply that the US dollar has an impact across all of the asset classes, but in particular, all right, we're interested in trading FX there, and as it says, many new traders will be aware of the importance of the US dollar, but perhaps not fully understand the significance of it in financial markets. And it's important for anyone trading FX markets to recognize the role that the US dollar plays not only in FX, but in international trade and other markets. So today we'll focus on explaining why the US is important in FX trading, US dollars is important in FX trading, and what you can do to help turn it to your advantage. Okay, how to utilize it. As I said, I could go on about this for days, but we've got about 40 minutes, so I'll be a little bit concise, okay, in that. But hopefully, there's enough there to certainly help new traders just grasp a little bit of understanding about its importance and how you can build it into your existing trade plan. So lots of stuff to talk about, but as the slide says there, why are people interested in US dollar? What is it that makes them interested in it? Well, when you look at the sort of, let's say, the global markets, international trade, etc., many international trade deals, they're settled in the US dollar, and we'll come on to why later on. Many international debt obligations are settled in US dollar, and that will be more relevant when we look at a couple of the charts later in the session. Oil is settled in US dollars, okay, and of course energy is hugely important to both individuals, countries, organizations, etc. And primarily at the moment, all commodities are priced and settled in US dollars. Now, we have seen a little bit of a change in that, okay, certainly with some of the BRIC nations doing that, but in terms of the size of that trade compared to the overall, let's say, international trade frameworks, it is minuscule. But those and other macroeconomic factors that they're at play with the US dollar, and hence why it starts to take on an importance of its own. And so basically, if you're trading in FX markets or commodities, and probably crypto, fixed income, and equities as well, you are involved in a trade with the US dollar. Hence why it becomes so important for FX traders to understand the US dollar and its relationships with other asset classes, other instruments, and being able to just have an overview and understanding of that can help you make sense of moves in the overall global markets, but also specifically the US dollar and currencies that trade against the US dollar itself. So if we have a little look at a quick snapshot of, what are presently the most popular traded currencies in the world? Well, you can see there, over a third already is effectively in the US dollar, followed by the euro, then Japanese yen, sterling, Aussie, Swiss franc, Canadian, and Kiwi dollar. And that's just a snapshot. Those numbers can change a little bit in terms, let's say on a quarter by quarter basis, but the general trajectory is pretty much always the same. The general sort of the general sort of sense, okay, the general sort of theme, generally stays the same. Namely, that US dollar is like the most popular traded currency in the world. As we sort of just touched upon there, there are reasons that in terms of how commodities are priced in dollars, debt obligations, etc. But hopefully, what you can see is that if you rank those most popular currencies, well, clearly, it's US dollar at the top of the pile, followed by euro, yen, sterling, Aussie, Swiss franc, Canadian, and Kiwi dollar. Now, for new traders, what you might hear experienced traders, utilizing certain, language to describe or understand their trading. So when you look at the number 2 to 8 currencies on that last list, when they're traded against the euro, against the US dollar, these are known as the majors. Okay, so when you hear traders talking about euro dollar, dollar yen, pound against dollar, Aussie against dollar, dollar Swiss franc, dollar against Canadian dollar, New Zealand dollar against US dollar, those are known as the majors. Okay, they're the majors because they are the kind of most popular currencies traded against the numero uno, which is the US dollar. Trades between numbers 2 to 8, they are known as the minors. So euro yen or pound Aussie or CAD Swiss franc, they are known as the minors. And trading outside of these kind of 1 to 8 currency instruments, that is known as the exotic. So there you might get let's say the Singapore dollar against the Mexican peso. Okay, that would be seen and traded and trended and called as an exotic. And so sometimes it's just useful for a new trader to just understand what that means when you hear FX guys talking about whether they're trading the majors, the minors, or the exotics. But we are going to focus today on the majors, all right? And there are reasons for that, which we'll talk about in a moment. It comes back to that thing. Clearly the US dollar is a very popular currency, but why is it? Well, not unsurprisingly, US dollar, it's the reserve currency of the world, based on the being the largest economy in the world, the United States, and that's not going to change in the next year or two. All right, okay, and lots of people are very quick to talk about, let's say, the death of the dollar or the death of the US economy, but I don't think that's happening overnight. Okay, if that is even a thing, it might take a generation. But what we also see is, as I said earlier, commodities, they are priced in US dollar. Remember, those of you who joined me last week, sorry, we talked about trading commodities, and we talked about how trade commodities are broken down into either soft commodities like agricultural or hard commodities like energy, oil, etc. And commodities are, for the most part, still priced in US dollar. As I said, we've had a few ructions this year about certain, let's say, certain nations, in particular some BRICS nations, wanting to move away from the dollar as the settling currency, and a few of them have done that. But in terms of the scale of that trade, it's still minuscule. It's still small. That might grow. It wouldn't surprise me if it did. But the reality is that the international trade is still run along on US dollar, on the kind of US dollar. So with that in mind, all countries need to hold US dollars in order to facilitate, commodities purchases and other global trades. So, hence why that just explains, why that US dollar is so popular, right? Because it's the reserve currency of the world. Commodities are priced in that. International trade, a lot of that is priced in that. So, as it says there, if the US dollar is the number one most popular currency, and every FX trade is one currency against the other, then which are the most popular currencies to trade against the US dollar? So I think I might have a snapshot here. Yes, so here we can see. As I said, sometimes these numbers can change a bit on a quarterly basis and annual basis, but the theme and the trajectory stays pretty much the same. And you can see there that the largest traded currency is the euro against the dollar, and I think it's still the most largest traded instrument in the world is the euro against the US dollar. Then you've got dollar against yen, pound against dollar, Aussie against dollar, dollar against Canadian dollar, and Kiwi against the US dollar. So, and you might already pick up what the theme is, in that particular move. Before we move down into trading some of those minors like euro against sterling, Aussie against yen, etc. So, if you're new to the world of FX, this just gives you an insight in terms of which are the most popular, where is the vast majority of the business done when you're trading FX pairs, and you can see that that's pretty clear. Who is the biggest, which are the biggest pairs, and what makes up that kind of relationship. The reality is that the dollar is king in the FX markets. Whether you like it or not, all right, the dollar is king, and really over more than 50% of trades in the FX market involve the US dollar in some form. So, with that in mind, it is unbelievably important to stay on top of the US dollar, to understand what the US dollar is doing. Is the US dollar, is it strong? Is it weak? Is it trending? Is it range bound? Is it quiet? Is it volatile, etc.? Because if you can engage in FX markets, it can have a huge impact. So for the rest of the session today, what we'll do is we'll focus on the majors, which, if you remember, is really those number 2 to 8 currencies trading against the US dollar. And so that's effectively the US dollar pairs. Others are known as the minors, euro, yen, sterling, Swiss franc, Aussie, Kiwi, etc. And I trade them myself, absolutely. And then, as we said earlier, the outside of that, they are known as the exotic. So you might be trading the Brazilian real, which is offered to you here on ActivTrades, or the Mexican peso, or the Hungarian forint, is it? I think, off the top of my head. And that's. But we're going to focus on the majors. But what it is important to know for new traders is that, unlike the stock market, the FX market, it has neither a physical location nor a central exchange. So, you can see the New York Stock Exchange, London Stock Exchange, etc. They're a central exchange where orders go to be traded through that exchange. The FX market doesn't have that. It's known as an OTC, over the counter, and it's effectively, it runs on the kind of interbank network there, but it runs 24/5, unlike the stock market exchanges, and it is primarily still the kind of the biggest market in the world. And the numbers that get banded around are between around about $6 trillion a day is traded on FX markets. And sometimes people forget that the FX market is not there to aid speculation. The FX market is there to aid international traders, to grease the wheels of international trade, to be able to keep things going. And sometimes, as individuals like ourselves who are speculating on that, we sometimes forget. Sometimes you forget that actually, it is not there for speculation. It is actually there to run the engine of international trade, and that's always important to remember, because it can help you make sense of why particular moves may actually occur. Another element to talk about it is, we've mentioned on it earlier, is that, because commodities are priced in US dollars, that means that all nations need to keep an element of US dollars. Okay, central banks need to keep hold of certain amounts of US dollar to help ensure that they can invariably complete those international trades. So if you look at the world FX reserves, okay, I said once again, these numbers can change a bit, but the theme and the trajectory is the same. You can see that, world FX reserves, 62%, nearly 2/3 of it, is held in US dollars, and then a little bit else of sterling, yen, and the euro. Okay, and then the rest is others. So you can see there in terms of that, it's just another reason why the US dollar is so dominant and so popular. Okay, because as I said, it's one of the things that helps keeps the wheels of international trade rolling. Okay, which is what's good for all of us. With that in mind, okay, in terms of looking at how it's made up, why it's so important. When it comes down to us as private traders, well, actually, how can we monitor the US dollar? How can we actually keep on top of understanding what is the state of the US dollar? And one of the easiest ways is to analyze the US dollar is by utilizing the US dollar index. So you might have the ticker of Dixie or USDX, okay, depending upon which platform you might be looking at. You'll hear it quite often referred to as the Dixie, okay, in itself, DXY. And what it is it is a measure of the value of the US dollar versus a basket of currencies. And I think you can see there that those are the currencies that it's basically held against, in terms of the euro, the Swiss franc, the Japanese yen, the Canadian dollar, British pound, and the Swedish krona. And it is around about I think about 57% of that basket is made up of the euro, and that becomes useful information, because what we see is, as we'll see in a moment, if we look at a chart of the US dollar index, we can also see the inverse correlation between the dollar index and the euro dollar chart, which we will look at in a few moments' time. But the value of the index is a fair indication of the value of the USD in global markets, and we're going to look more at that in a moment. And you will see that basically by being able to understand that dollar index chart, that can give you great insight into whether the US dollar is strong, whether it's weak, whether it's trending, whether it's range bound, whether it's volatile, whether it's quiet, etc. And as an FX trade, that can be enormously helpful, okay, to understand what that big silverback gorilla is doing, because that's really what it is. So, here is here's a chart of the dollar index. Let's just bring up the old drawing tool here. Okay, US dollar index, a weekly chart, which I like. Okay, and I will show you. You can see that is, it's available to you on all of the ActivTrades platforms. So, TradingView, okay, ActivTrader, MT5, MT4. You will have access to that, and I have it on a weekly chart here. This is a particular case of it, which we can just look at. And excuse me, what it does is allows me to give me an indication of where the strength and the weakness is within A, the FX markets, but B, within the US dollar. So if we look at here, as I said, it's a weekly chart for last year, 2022. Hopefully you can see that invariably, we had a very, very strong trend there in the dollar index, which is reflective of real strength in the US dollar. There was demand for the US dollar until towards the end of last year. That changed, and invariably what we saw was basically a shift. There was weakness in the US dollar, and for most of the part of this year, for a good part of this year, what we saw was actually for the first kind of sort of 6-7 months, the US dollar was range bound. So we've had an uptrend, we've had a downtrend, and then we've had a sideways move. And interestingly, what we have seen is that kind of at the sort of end of the summer, July time, what actually happened is price here in the dollar index went down to the big round number of 100. And then invariably was a false, what we'd call a false breakout, before it reversed, and then hopefully what you can see is that for the last couple of months we've just seen real strength in the dollar. Okay, basically, and the sort of the week before last, what happened is we kind of broke through these highs of the year, and now we're just holding up above that level. But what was kind of interesting to see, and I talked about it a lot, was that we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 straight weeks of bullish closes on the dollar. Okay, that is exceptionally rare. Okay, exceptionally rare. Even in this really almost, what's that, about 10-month long strong trend we saw last year in 2022. You can see for yourself, there was, the most you'd have is like 1, 2, 3, 4, 5. You'd have maybe six weeks. Okay, it was the strongest here. This year, what we've done is we've had an 11-week strong, okay, bullish close. Okay, it's exceptionally rare. I suspect that's probably not happened before. And that, of course, is an indication of the strength in the dollar. So if the dollar is exceptionally strong, that allows you to start to sort of build a picture of what those other major currencies. Remember, we talked about the sort of kind of 2 to 8. Well, if the dollar is exceptionally strong, it is likely that the others are going to be weak, and that can help us with our analysis to get a view of which way we might have it in terms of our bias and sentiment for the for those particular currencies. So that we have the dollar index, and we'll look at that live. One of the other ways you can monitor the US dollar on in a kind of a different view, getting a different angle, is to monitor emerging markets. Okay, and you can do this. There is a chart called the EEM, which you'll find on the Trading View platform. So remember, as ActivTrades clients, you have ActivTrader, which utilizes Trading View platforms, or you can actually trade through the Trading View platform itself, and on there you'll find the EM, the Emerging Markets Index Fund. And let's just have a little look at that. I think I'll put that in as the next chart. And you'll be thinking, well, why would we do that, Paul? How can that possibly help? So if you remember, what we talked about was that we talked about commodities are priced in dollars, and also international debt obligations very often priced in dollars. So if you think about this, if the dollar is very strong and you're an emerging market, an emerging country, okay, you might have debt obligations, which are priced in dollars. So the stronger the dollar is, the bigger your debt repayments are. The bigger your debt repayments are, the less you have to spend on your own, domestic programs as a government or a central bank. Conversely, if the dollar is weak, that basically that allows emerging markets to virtually strengthen in terms of being able to export their commodities, and also their debt repayments would be less as a percentage of their overall GDP and payments, etc. So you'll find that there is very often a bit of an inverse correlation between the dollar index and the emerging markets index chart. Okay, EEM is the ticker. You'll find that on that Trading View. So remember what I was saying is that we saw in 2022. We saw the dollar was very, very strong, and as it was very, very strong, well, it's no surprise to see that the EM, the Emerging Markets Index, was going the opposite way until, kind of, as I said, end of last year, that trend, we had a little bit of a downtrend in the dollar, uptrend in EM. We went sideways for a few months, but then actually what you can see is that that trend down, okay, is reflective of the strength in the dollar index. So, as I said, this can just be an additional way to help build a picture overall, and I appreciate that we also have here, even though these are the English desk webinars, I do appreciate that we have a truly global audience of people who join us from all 4 corners of the earth. And you're very, very welcome here. And so hopefully maybe this is another way to help you, okay? Because I appreciate you might be your local currency to trade might be very, very different from one of the majors, okay? So this is a way of you being able to understand the dollar and perhaps also understand emerging markets, okay, and see the relationship between them, and that can be very helpful just to help build that overall picture of what's going on in the world and what's going on with the US dollar. So hopefully it's just giving you a little bit of insight into how you can start to analyze the dollar and get an indication of it. And there are also ways you can utilize. You can look at the treasury yields on US bonds, etc. That's another way, perhaps a little bit outside the remit of today, but something you can do, maybe something we'll look at in the future. But we want to look at, okay, that's great, Paul, but how do we use this information? Okay, why is it important to us as traders, especially FX traders? Well, one of the good things about focusing just on the majors, okay, the majors against the US dollar, is that they are actively traded pairs. And actively traded pairs, they have higher liquidity, okay, which means that you have more interest in them, which usually means it's easier to buy and sell in FX. So it shouldn't necessarily ever be an issue for you as a private trader being able to buy and sell in FX, but you have to understand and recognize, the sort of major players does start to become, a key element, okay, in terms of having their liquidity, of which we'll talk about a little bit more. What is important, what is keen to take on is that, remember, higher liquidity, it generally equates with lower commission costs, okay, because there's economies of scale, because you've got more people engaged in trading that particular instrument, and that generates good trading conditions. So you'll invariably get things like lower spreads or minimum commissions, okay, or for rolling over positions if they're with the swap, or you might have actually no or very small commissions for opening a trade, and you should generally have good trade execution. And these are all things that are actually important. Sometimes maybe new traders gloss over them, maybe not see or recognize the value of them. But actually, as you trade for longer and as your trade size increases, these are things which start to become important to you, because they're an element of your doing business in that market. What it also means, when you're looking to focus on the majors, is that there is more focus on those specific currencies, and that means you'll have access to more analysis and more expert opinions. And I appreciate that can be a double-edged sword at times, because sometimes you can have too much insight and opinion. Actually, you want to keep it a little bit easier, but at least you have the availability of analysis and expert opinions. There are also things like more forecasts, more trading signals created, and they're published for those more popular pairs, specifically the majors. And you'll also get more focused coverage of events in the news and media that relate to those specific pairs, okay? And also you'll find there's more trading guides and education focused on those pairs, and you'll find lots of that on here on our own ActivTrades platform. Okay, you'll be able to find plenty of trading guides, plenty of education, or an awful lot of on the webinar archive of elements that that specifically look at trading the majors, because there just becomes so much focus, all right, and that can help a new trader to try and make sense of not only trading but also the FX markets, US dollar, and then also the majors themselves. What is also important to take on board is that and what can impact those kind of popular major currencies is also the time that they are traded, related to their geography. So within the FX world, the London session, the European session from about 0700 to 1600, let's say UK time, is still the main trading session, followed by the New York session. And what you very often find is that a very popular time in terms of the volume of trades is approximately around about 3 to 4 p.m. London time. So you might just want to, if you're joining us from the other side of the world, you might just want to sort of just take a moment to relate to that, what time that is for you yourself. The reason that is important is because we have the overlap of the European session and the US session. So the European session is coming to an end. So, those kind of traders are looking to sort of, square away their positions. The US session is starting up, okay, and US FX traders are going to be looking to take positions, okay. So that's why we can see very often there's an increase in sort of volume and volatility at that particular time. And that's kind of useful knowledge for traders, all right, depending on, regardless of where you are or what you're trading in. If you're involved in FX markets, understanding these particular windows can be beneficial to know as and when to do your trading. So as we're saying here, now I appreciate that we're based on sort of GMT Zulu time here, right? But what we are looking at is whilst the London session, okay, the London morning session is still probably the important session for certainly for FX. This kind of overlap here, okay, this overlap between the London session and the New York session is a real key time, okay? It's a real key time, as I said, because either European traders are closing out their positions, and American traders are looking to start their positions, to take positions. So that can lead to elements of volatility within those specific within FX markets and within specific pairs that relate favorably to that particular geography. But it's also understanding to know, okay, in terms of times when you should be trading, when you shouldn't be trading. So if I look at here, okay, which is like into the for me is the overnight Asian session. Well, if I was trying to, let's say, intraday trade a minor like the euro against the sterling, well, I don't think that would be a terribly smart move to make, because if you've got euro against sterling, the vast majority of those traders, okay, the European traders, UK traders, they will be looking to operate, okay, in that London morning session. Trading, let's say, something like euro sterling in the trying to intraday trade it in the overnight session, that's not the smartest move ever. And that's one thing where having a focus on US dollar, it does well, because the US dollar, as I said, is it is the main player in those FX markets. So there is always liquidity regardless of the time of day that you're particularly looking to trade in that. But more of that in a moment's time. Daphne says, is the US overlap more heavily traded than the Asian overlap with London's open? That's a good question. It's a great question, Daphne. Thank you. And the answer is yes. Okay, that US and Euro overlap is more heavily traded. Okay, they're kind of, I'd be saying, a window between let's say 1:30 UK times on days where you get major news announcements like the NFP. Other than that, you're going through to sort of between that time, as I said, between about 3 o'clock and 4 o'clock London time, right? We have had the US stock market opened around about 9:30 US time, 2:30, let's say, UK time. And then, as I said, the London markets are getting ready to close down. European markets, London markets are getting ready to close between 3:30 and 4:30, etc. So there is an overlap period there, and that is more it's more heavily traded than the Asian overlap, and you can actually see that very often. It used to be very clear. It used to be very clear that there was very little trading in the overnight, what we would call the overnight Asian session, and that is what allowed you to trade breakouts into the European session, as the European traders came in, started putting on their positions, and we would see breakouts and trends. Okay, and that is still valid, but not as valid as we have seen more trading in the Asian session, but nevertheless, the kind of European and the US overlap is still the key element. So, thanks for that. Good question, Daphne. So here's a little starting plan for us, okay? I appreciate that lots of people like to trade in different ways. Lots of people, there will be people joining us who are swing traders, some are position traders, some are intraday traders, some are trend traders, some are reversal traders, okay? I appreciate that everybody, has their own particular way, but nonetheless, you can still have a routine, okay? Still have a little process checklist that helps you keep on top of the US dollar and understand it, okay, and understand the relation to it. And so, what you'll find, and we'll switch across to it in a moment, is that you can set up a US dollar profile on whether you're ActivTrader or MT4, MT5 or TradingView, okay, and that's what I have. This is just a snapshot from my own one, okay, and I have it as a dollar, so I have it here. At the bottom here is the dollar index. We'll look at the live, and then what I've got is Aussie against dollar, pound against dollar, euro against dollar, dollar Swiss, Kiwi dollar, dollar CAD, dollar yen. Okay, and the reason is that if you notice, all of those involve the US dollar. That is the major. So at one glance, I can get a very quick view on where is the strength and the weakness, okay, within the dollar and the overall FX markets, and we'll have a little look at that in a moment's time, all right. And so, what we can do is, what I always suggest is have a profile for the US dollar. I personally have a profile for all of the major currencies that I trade, but as a starting point for a new trade, even if it's just, have that on the dollar, that can be a bonus. And then, identify levels of support and resistance from the daily chart to begin with. Okay, if you're just a new trader, just be able to start to draw in those significant levels, and we'll look at that in a moment. And then look for, are there any correlated trends within the US dollar majors? Okay, is everything moving? Is everything moving in the same direction in terms of it is either showing the dollar strength or dollar weakness, and so that you're in a position to identify, is there a strong US dollar trend, whether it be to the upside or whether it's be the downside? Can we understand that? Because as we've seen, the dollar is the daddy. It's the big major currency. So if you're able to surf that wave, what we're looking to do is to trade in the direction of a strong US dollar trend, if there is one. Okay, sometimes there won't be. I said earlier this year, the dollar really just basically was in a bit of a sideways motion for about 6 months or so, until it started to go into a new trend. And what we're looking for is there a significant clear trend? Okay, and because if you have that bias, if you understand that trajectory, well then you can effectively utilize that to trade either breakouts or pullbacks depending upon your particular trading style. I appreciate some people like to trade breakouts, some people like to trade pullbacks. Generally I tend to prefer to trade the latter. Okay, I'm more of a pullback trader, but it's about finding the right environment for your particular trading style. And what you can do is you can use price action or candlesticks for your triggers. Okay, which is something we've talked about before. You'll find lots of videos in the webinar archive on specific candlestick triggers, things like pin bars, engulfing candles, key reversal formations, inside bars, star formations. Okay, all of which are particularly valid. But as always, ensure that you manage your risk. Never trade without a stop loss. Never risk more than a small portion of your account on a trade. And so there you go. Then that's a simple starting plan. If you're maybe looking to sort of just focus a little bit more, just get a little bit on top of your business and top of your game, well then actually even just here starting out by basically creating a dollar profile, just working with that. Okay, is a really good starting point, because if you can understand the significance of the dollar and what it's doing, well then that puts you in a great place to be able to sort of generate good trade ideas from that. So, as I said, use this. So new traders just focus on trading the majors, right? Because as we've discussed, you get lots of liquidity. There's usually enough volatility for your trades, okay, to give you some trading ideas. You have tighter spreads, which generally means it's reduced cost of business, which maybe at the start of your journey isn't always the first thing on your mind, but as you go deeper into your trading career, you will realize that as position size increases, that is a cost of business. And also gives you access to lots of research on those majors. Okay, you're never short of research, okay, of people's views. Whether you choose to use those views is another matter, but at least there is always an abundance of information. Now, if you do that, well, then that effectively that would kind of also make you a US dollar trader, right? And actually, that's okay. All right, that's easy, because in many ways it makes it easier to follow the formal use, because you just need to keep on top of what is going on, with the US economy, and of course, certainly within financial media, that's never an issue whatsoever. There's plenty of research on the US dollar that you can study. And sometimes for new traders, that makes it easier to avoid overwhelm, rather than trying to be all things to all people and just follow, all of the majors, minors, some of the exotics. You could actually just focus on those sort of 7 major, currencies, and just to work on that. And that in itself, for most traders, it is actually not a bad way to operate. So just before we switch across to live charts, all right, in conclusion, I said right at the start of 2023 that it's going to be an interesting year in market, and it certainly has been. And thank you for joining us. Okay, as this journey we've gone through on our Monday Market Matters, I hope you'll continue to join us. Remember, when we're looking at the US dollar, it's king when it comes to FX markets, and also to the trading and investing in US markets. And it is also important to commodities, fixed income, and debt markets. So as an FX trader, you need to ensure that you are covering the US dollar, that it's part of your analysis, all right, that you're on top of it. And the easiest way to do that is to look at following the dollar index, and also you might want to have a look at emerging markets, and also if you've got a bit of experience, you might want to look at treasuries as well, in the way that helps dictate the US dollar. And as I said, if you're a new trader, new to trading, new to FX, perhaps just focus on the majors, all right, for beginners in the FX markets. That can be a way for you to get exposure, okay, by trading the biggest instrument that also has good liquidity, good volatility, tighter trades, okay, good trading conditions. So, you can take that away and start to do that. So why don't we have a little look on live markets? Before we do, just a reminder, okay, that Monday Market Matters next week is all about trading range-bound markets. Okay, we talk an awful lot about trading trending markets, but it's also useful to know how could we engage with range-bound markets. So I hope you'll join us for that. You can register, use the QR code there if you've got your phone in front of you, or just go onto the ActivTrades website and register, and you'll get sent the details. And I look forward to talking to you next week about that. And as always, we'll just switch across to the charts now. But as always, if you've got any questions or comments or feedback, okay, or maybe there's elements you'd like to see me cover or talk about in the future, well then by all means, you can contact ActivTrades there. The English desk number is 0207 6500 567, or email englishdesk@activetrades.com. So if you just bear with me a moment, what I'm going to do is I'm going to switch across to the charts, and we'll have a look at what's been going on in the dollar and also what's been going on in the US market. So just bear with me one moment and we'll switch across. Okay, so I'm hoping that you can still hear me. I'm hoping that you can see me, or rather see the charts. That's the more important element, that you can see that there. Okay, so I'm hoping you can all see that to follow through. And as I said, this is, let's get the old drawing tool here. This is my, I've got a US dollar profile here. This is on one of the ActivTrades platforms, but it could be TradingView, could be ActivTrader, could be MT5, could be MT4. It's not that difficult to set up. And what I've got here, as you can see here, I've got here, the bottom right corner is dollar index. Then I've got Aussie dollar, Euro dollar, pound against dollar, dollar Swiss franc, Kiwi dollar, dollar Canadian, dollar yen. Okay, so all of the majors just on one chain, and so very quickly I can start to get an indication and insight into what's been going on here. Okay, what's been happening here. Let's just maybe put this into put these all across here. Bank. Okay, just bear with me 1 second, and what we'll do is maybe dollar might be. There we go. So. Bang. Just going to make this a little bit bigger just to help us get an understanding. Okay, there we go. So, okay, so here is the dollar index. Okay, so you'll see it USD index. And this is the December contract. If we just look at it there, okay, you'll find it USD Indu. Even if you just get that that is what we're particularly looking for. Here it is on the monthly chart. And remember what I was saying is that we had a real period here of real strength there in the dollar. Then we had weakness in the dollar. Then we went sideways in the dollar. Then we pumped down to the 100 level and have rallied our way up strongly from there. Okay, if we go down to the weekly chart, this is what we had a little look at. Okay, we just had real strength there, haven't we? That's real dollar strength. It looked like it might have been coming to an end, and then we had events in the Middle East. Okay, that's just basically shook everybody up a little bit. So if I go down to the daily chart. Yeah, if you go into the daily chart, what we looked at there in that weekly chart, that's it on the daily chart, and hopefully you can see, that was just a very lovely, clear trend. Okay, making higher highs, higher lows. That's telling us if the dollar is strong, well then, the majors are likely to be weak against it. And what we saw was, we were starting to basically come off, but then invariably, as I said, the dollar had a little bit of a bump at the end of last week. Part of that is to do with the inflation numbers, right? In the US, where they're a little bit higher than expected, so there might be the possibility of more interest rate rises. But also there is a case of that, the US dollar is seen as, as a safe haven there, okay, along with the Swiss franc and the Japanese yen. There is an element of that, if for different reasons, okay, in terms of what we have seen in the past, is that in the old days, safe haven would be just basically, gold, Swiss franc, Japanese yen. But over the last 15 years, we've seen that encapsulated and grown to effectively things like US Treasuries, okay, being a safe haven. Also, US tech companies being seen as a bit of a safe haven as well. And if you're a international trader, and you want to buy, US tech, well, that means you need to pay for them in dollars, which means you need to buy dollars, which means creates demand for dollars. So, but anyway, hopefully you can see that has just given us an indication of it. We've seen that we've pulled up a little bit there in the last couple of days. But that is also reflected. Remember what I said is that it reflects the inversely correlation with the euro against the dollar. The euro makes up 57% of the dollar index, so it's no surprise to see when the dollar index is in a strong uptrend that we also see euro dollar in a very strong downtrend, and that is what you can see there. Okay, Courtney has just done that, so that. Once again, that can help you. If remember, euro dollar is the biggest traded instrument in the world. And so invariably, having an understanding what the dollar index is doing, what the euro dollar is doing, that can help you in terms of your analyzing, identifying trends. Okay. And with that, if you're a trend trader, wanting to be able to utilize that as a way to help you trade in the direction of that trend. And hopefully, as I said, you can see that has just been one way traffic. What might have bucked the trend a little bit is, in fact, before we do dollar Swiss franc, we'll also look at dollar against Japanese yen. So what we have seen here is, remember, we've seen dollar strength the last couple of months, okay? And, dollar strength against everything else. And that is what we've seen here. The yen has been very weak and the dollar has been, very strong. And the impact that has is that, I'll just zoom in here, is that the Bank of Japan and the new Bank of Japan governor, Mr. Ueda, and one of his deputies, Mr. Suzuki, have been commenting that whilst Japanese yen weakness helps an export economy like Japan, you can have too much of a good thing. Okay. Too much weakness is gets to a point where it's not terribly it can be damaging. And what we're seeing is that there were comments there about the Japanese looking to intervene, okay, to basically strengthen the Japanese yen, which they would do by basically buying yen, selling other currencies, and they did this about a couple of weeks ago. What we saw is that price had got to this level of the 150. I think it was just taken up there on the US job number, and then basically what we saw was that intervention, dropped dollar yen there by I think it was just under about 300 pips. Okay, which was a big move if you're caught on the wrong side of it. But the interesting thing for us is that even though that has basically occurred there, hopefully you can see that basically it resumed. Okay, it resumed its march back up here, and now I suspect that we will see that kind of 150 level tested again and again, because we can see that's a level that the Bank of Japan have drawn in a line in the sand. Now everybody will want to test and see, are they going to actually defend that? Will they keep defending that? Or will it come at will the price of it be too much? And invariably, they will not defend it, which means the price will rocket itself up. So let's just get rid of this. Maybe let's have a little look at this on a smaller time frame here on the 4-hour chart. So so I'm hoping you can see that that was the 4-hour, okay, when we had the intervention, but you can see that price is still basically starting to work its way back up. Okay, and that level there is going to be a significant level that dollar traders are going to be looking for in terms of trading that dollar against the Japanese yen. Maybe one who's booked the trend a little bit on that is the dollar against the Swiss franc. So hopefully you can see there, we've had that dollar strengthening there for a couple of months, which was in line with what we see on the dollar index. You saw the euro dollar weaken, seen dollar against yen strengthen. We also saw dollar against the Swiss franc strengthen up until the start of this month, when invariably what we have seen is that basically, even though the dollar has been strong, it was weakening against the Swiss franc. Why was that? Well, what we've seen is invariably, let's say, some of those geopolitical events over the last 7 or 8 days, had an impact. And what we saw is that we've seen a flight to safety part of that flight to safety is a move into the dollar Swiss franc, okay, which you can see there on the daily charts. And one of the other ways, okay, one of those other ways you can recognize that is also on the is with gold itself. And remember what I said. The gold is priced in dollar, so it has a relationship with the dollar. And if I look at the weekly chart here, if you have a look at the weekly chart, we can see that, for a good part of the last few months, that as dollar got stronger, gold got weaker. Okay, so there's the relationship between dollar and gold. Until what we saw is, we bounced off here the weekly 200, okay, that we saw there. And then if I go down to the daily chart, let's just clear these drawings and go down to the daily chart. What we saw was, on the Friday of a couple of weeks ago, we saw this was, having dropped significantly. We saw basically this is a bullish engulfing candle. This is a bullish key reversal candle. That was a week last Friday. And then, of course, we had the events of last weekend in the Middle East. And we see them on the Monday, or Sunday night, the Monday, the prices gapped up again. People have bought dollar, and you can see for yourself that how strong dollar has been as we've seen the sentiment there. Okay, people buying dollar, which means is another reason why we have seen strength in euro and Swiss franc, because Swiss franc is deemed to be a neutral country, a stable economy, and its currency is deemed to be backed by gold. So if there's demand for gold, there's demand for Swiss franc. That means we see a strengthening of it. So even though the dollar has been strong, Swiss franc is at this moment, Swiss franc is the top of the pile, simply because of the sentiment that is around at the moment, based upon what we've experienced in the last week or so. That might well change. Okay, if we see, let's say, dovish behaviour in the Middle East, or that demand for gold and dollar. Gold and Swiss franc may increase if there is if there's an expansion there in terms of what is going on, and all traders will want to sort of keep aware of that over the next coming days and weeks and stuff, as it will have an impact massively. Okay, there, ladies and gentlemen. So, sorry, but we're sort of just running out of time there. As always, as they say, time flies when you're having fun. And I hope that has helped just give you a little bit of insight into, why the US dollar is so important, and how you can analyze it and keep on top of it, and also how you could utilize it to, let's say, focus your efforts as you learn to trade FX markets by just focusing on the dollar index, and in particular just trading it through those majors. Okay, having access to euro dollar, dollar yen, dollar Swiss, pound dollar, dollar CAD, Kiwi dollar, Aussie dollar. That would make you a dollar trader, but that's absolutely fine. Okay, as a way and a means to start to engage with FX markets, that might well be the kind of the best and simplest way to do that. Okay, so Carolyn says very interesting. Thank you. Yeah, you're very welcome, Carolyn. Thank you for joining us. Okay, thanks, Daphne. Thank you to all of you joining us. As always, I wish you the best of endeavours in your own trading endeavours, ladies and gentlemen. I hope you'll join me next week. Okay, where we'll focus on trading range bound markets. As I said, if you're in London this weekend, then by all means come along and say hello to the ActivTrades crew, who will be there on our ActivTrade stand, sponsoring the London Traders Show at the Novotel London West. Trade well, everybody. Have a fabulous week, and I will speak to you soon. Cheers.